Good morning, fellow Malaysians. You are now watching Financial Freedom Minutes with Yap Ming Hui. Today is International Women's Day. And as we know, today women are mothers, wives, daughters, and working professionals. So, in today's show, I wanted to dedicate first half of my show to the women out there. And why is it important for me to share about money management tips for women especially? Now, there's two facts I need to share with you. Number one, women generally live longer than men. Number two, women generally also work and earn less than men. So that makes money management for women more challenging than ever. Today, the tips that I'm going to share will be categorized into three categories of women. Okay? First tip that I have is for the women who are married without children. Now, when you are married without children, one important question you want to talk about here is whether you should have a separate bank account or joint bank account with your husband. I would suggest you to have a separate a joint account with your husband on all those common family needs, like for example, mortgage payment, car payment, savings for the families, and etc. But at the same time, don't forget to keep a separate bank account for your personal needs. For example, you may want to give some money to your parents. You may want to actually buy something for your personal self. So that you want to make sure that you have a personal account, separate account that you don't have to discuss with your husband. Next, when it comes to decision making on investment, it's always concerned about whether you should actually do it individually or you want to join. My suggestion again is to pool the family resources together so that you'll be able to, if your husband is more savvy, you can let him be the main person to make investment decisions. But don't forget, always get involved in the discussion so that you know what's actually happening to your family financial affairs. Last, we can look at, it's very important for you to also update the will, because as you know, whatever will that you've written in Malaysian law before you get married will be revoked. So it's important for you to ask your husband to actually write a will. Hopefully, put yourself as one of the beneficiaries, don't forget, and ask him to review the life insurance policy, the insurance, the EPF nomination. And of course, ideally, your name will be there to protect your interests. Next, I want to talk about the married women with children. When you're married women with children, your priorities a lot of time will be on the children. So first thing a lot of people think of is like, what kind of education should I provide for my children and how much would that education cost? Now, if you are interested to find out how much you should save every month for the kind of education you want to provide for your children, log on to yapminghui.com. You'll be able to find a template to those calculations. Next, we should also consider a double tragedy event. Now, in the double tragedy event whereby you and your husband pass away together, leaving behind young children, if you don't have a will, of course, it'll be dragged for more than 3 years or 5 years before your children have access to the money. Even if you have a will, I can say it can easily drag between 2 to 3 years before your children have access to those assets. So, in this period of time, it's very important for you to make sure there's money for the children to go on their basic living, for their medical, and for their educations. In order to solve this issue, I would suggest you to set up a private trust, put in some money of your insurance policy to take care of the cash flow for the children, appoint a guardian, and also the trustee to take care of children in such an event. Now, after taking care of the children, don't forget also to take care of you and your husband for your own retirement. Start thinking about when you want to actually retire, when your husband wants to retire, what kind of lifestyle and living standard you want, and you can never start too early. Now, next, we want to go to the third category of women, which is what we call about single mother. Now, for single mother, the money management is even more challenging because in the event of your absence, there's no income anymore from any other spouse to take care of the minor children. So I would suggest you to review your insurance, your saving, your whatever EPF and whatever asset you have to make sure that you have enough money at least to take care of the children until they are at least 18 years old. Okay, that's number one. Number two, since you only have one single income, it's very important for you to set aside emergency cash should there's a loss of income. And here I would suggest you to have at least 6 months of your living expenses as an emergency cash. Last but not least also, you should not forget also to appoint a guardian or a trustee in your will, so that when you're not around, there'll be a person act as a guardian and a trustee for your children. Okay. Now, next, I want to share with you evaluations of a financial product to you. My purpose of doing so is to provide you more information, a better understanding of certain financial products, so that you'll be able to make better decisions before you commit your hard-earned money. Okay, this product that I wanted to share with you is an insurance saving product. It's suitable for women and also for men. You could have been approached by an insurance agent before for this particular product, or you could have bought this product already. Now, this product would require you, as you can see from the screen, to contribute, require me to start saving and investing 12,600 from the age of 49 years old for next 5 years up to the age of 53. And for every year of contribution, I will receive in return 1,083 ringgit for the next 5 years up to 53. Now, when from 54 years old onwards, I'll be receiving 2,083 ringgit for 14 years up to the age of 68. And at the age of 69, I'll be receiving 74,329,000. So, in essence, I would have paid 63,000, and in return, I will receive 110,996 ringgit. It's almost double about the money that I paid. It sounds good, isn't it? But is it? Now, how do we tell whether this is a good financial product for us to put our money into? So, first thing first is to find out what is the actual return on investment. What is the actual ROI of this particular investment? So, how do we find out? What's your guess? Now, let me share with you. Based on my analysis, this product would, at the end of the day, give you a ROI of 4%. So, imagine after putting 20 years, your return is only 4% compared to the fixed deposit interest rate, you're getting 3.5 or 3 something. So on average, you may get also 4%. So it's not too much higher than fixed deposit interest rate. So that's number one. So what are the advantages and disadvantages of this financial product? First, disadvantages of this product is that it's a forced saving scheme. It forces you to save the money. Number two, there will be no risk of loss of capital because you'll get whatever capital back plus some extra return. But what are the disadvantages of this product? The disadvantage number one is that the return will be too low. As you can see, it's only 4%. It may not be enough to hedge against inflation. Imagine if you can get 8% on the return, you can easily have double the money. Instead of 110,000, you may receive 220,000 for the 8% return. Plus, also, if you can see there's no flexibility there. Whatever money you put in there is going to be given to insurance company for the next 20 years. So if you have emergency, you cannot touch the money to do some other things at all. Okay? Now, so who should buy this particular product? So I would suggest this product will be good for someone who got no saving habit. Now, which means to say you have problem saving money, you should go actually buy this product. Okay? Or you may have no saving habit problem, but you don't have investment knowledge as to what to invest to grow the money. Then, of course, you can consider investing into such an insurance product. But if you are someone who got no problem of saving your money every month, and you're also someone who has got quite good investment knowledge, you know how to invest into properties, into unit trusts, or into share market to grow, to get anytime better than 5-6% or even 8%, then I would suggest you that this product may not be suitable for you. So, as I suggest to you, whenever you be approached for any investment product or saving product, always ask what is the actual return on investment. You should not be confused by how much they pay you and how much you get paid. Find out what's the actual return on investment before you commit your hard-earned money. Otherwise, it may be too late for you to reverse the decision. Now, before I end this particular segment, I would like to share with you a question from the viewer. This viewer actually asked me that I want to name my 5-year-old son as a beneficiary of my shop lot in my will, is he entitled to the property at such a young age? Now, my answer is both yes and no. No. Why I say yes? Because in Malaysian law, when you want to actually do a will, you can name any beneficiary to become the person to become the beneficiary for your will. But no, meaning why? Because you will not, should something happen to you today, your child, your 5-year-old child, will not be able to receive the property immediately. The trustee that you appointed inside your will be the person as an adult to hold the shop lot on behalf of your son until your son reaches 18 years old. Then only he will transfer the asset to your son. So that's why I say no. So be mindful of that. And this is what I have to share today. And I wish you all the best for this International Women's Day. Always remember, smarter you, smarter money management. I'll see you next week.